All right, so welcome back to Motion and Success. And listen, in this episode, I'm going to be breaking down how you can get funding for your small business. So I'm going to be going over 3 ways how you can turn your denials into approvals. A lot of times when it comes to going out and getting funding for your small business, people make these huge mistakes all the time, and they're wondering, why are they not getting approved? Why are they always being denied? What is the missing step? Why is these other businesses getting money? I have to be making money in my business to be able to qualify for funding, but those are all myths. And the steps that I'm going to be showing you guys is literally how you can turn these denials into approvals in 3 simple ways. And you can't beat these ways no matter what you do. These are the 3 ways. And here's way number 1. Way number 1 is personally guaranteeing by using your own credit. Number 2 is using cash flow that your business is already making. So if your business is making money and you can prove that you're making money in your business, that is one of the ways that you're able to go ahead and get approved. And the last way is by using collateral. Collateral is a simple thing where if you have an asset and the bank sees that as an asset, something of value, you can put that collateral up for approval. So now let me break down the 3 ways on how you're able to take either credit, cash flow, or collateral to be approved for your small business, right? So way number 1, let's just say, for example, you're in a situation where your business is either making money, you might be a startup, you might be, it might be an idea, you have a business plan, you know exactly what you need the funding for, but you might not have all the documentation as far as financials, the business is not making too much money. You can use your personal credit to go ahead and guarantee that you will be responsible for paying this money back on the behalf of your business. So this is where we say, hey, listen, your personal credit needs to be in order so that way you can go ahead and always qualify for funding. So now, basically, in order to qualify by using the credit, you must have a 680 plus credit score, right? A lot of times when you go to bankers, they're going to say, hey, listen, the bare minimum is 680. Your credit score has to be at least a 680. No derogatory accounts, no late payments, no collections, no charge-offs, no bankruptcies, none of that stuff, right? But what I always suggest is to have a 700 plus credit score. Because now if you're in a situation where you're at the minimum, you're putting yourself at risk to get the minimum amount of funding. If a bank gives $50,000 and that's their maximum amount of money that they give, and you need $50,000, there's no reason why you should be applying with the bare minimum, because guess what? They might give you the bottom of the barrel compared to a person that has a higher credit score. So that's way number 1. Way number 2 is using your cash flow in your business. So way number 2 is basically for the people that's already established. That's for the people that's already making money in their business. If you're making money in your business and you can prove that you're making money, this is going to be a great route for you, because now you can provide the bank statements, financial documents, and you can show, hey, listen, this is not a new idea. This is not something that I'm just thinking about. This is something that's already working. The people are buying. I'm already making money. Here's my bank statements and my financial documents to prove it that I'm making money. And then the banks will be able to say, hey, listen, all right, cool. I see that you're making money in your business. You provided me all the documentation. I can go ahead and approve this loan, this business line of credit, this business auto loan, this business credit card, whatever the product that you might be applying for. So that's way number 2, using cash flow. So way number 3 is by leveraging collateral. Collateral is pretty much where you're going out and you're using some kind of asset that has a value attached to it, just in case if you were to default on any kind of loan or the business credit card or the business product that they do give you on the behalf of your business. So now collateral is good because now if I have a piece of real estate that has some kind of value attached to it, if I have some money sitting in an account that obviously is valuable to me because it's money, if I have some kind of car or some kind of truck or some kind of equipment of value, you can put that collateral up to be approved for that, either that loan, that line of credit, the business credit card, whatever the case may be. So that's collateral, right? So now let's take it a step back and kind of break things down, right? And where most people usually lack at is they're lacking in the credit. So now what you can do is you can go ahead and start fixing your credit, so that way you can go ahead and personally guarantee, and now you'll be able to get approved for the loan, right? Instead of actually using cash flow or collateral. And this is amazing because some people might not be in the stage where they're not making money just yet. They might not have a piece of collateral to put up as their approval. So the best way that I usually go is by personally guaranteeing. That's the most easiest way. That's the best way, in my opinion, to be able to get approved for any kind of business funding. So if you're looking to get funding, make sure that your personal credit is in order, so that way you can qualify and go out and get the maximum amount of funding for your small business. Now, let me jump into the second part of getting approved. So now we understand the cash flow, the collateral, and the cash flow that's coming in your business, which I call the top 3 C's that you need to be approved for your business. Let's talk about the different programs that these banks usually base their approvals on, right? So now I'm going to break it down in 3 different categories. Category number 1 is going to be no-doc loans. So no-doc loans are programs that banks have where they go out and they will say, hey, listen, your personal credit is good. I understand that you have a business plan, you have a business idea, or the business is already making a little bit of money, or it's making a lot of money. We're going to use your personal credit and your projections of the business to approve you for this loan, this business line of credit, this business credit card, the business auto loan, whatever the product that you might be looking for, right? So that's a no-doc program. They're not going to ask you for any tax documents. They're not going to ask you for any bank statements. I mean, they can ask for it, but most times they're not going to. And they make it a little bit more easier for you as a small business owner to go out and get funding for your business. So now the second program, or not necessarily a program, the second category that you might fall into when the banks are looking to make their decisions for approvals is using LightDocs. So basically, LightDocs is when they're asking you for the past 3 months of bank financial statements, so that way they can base their approval decision on if the business is making money, or is this something worth investing their money into. So now this is where you're proving, hey, listen, for the past 3 months, my business has been making at least $10,000 every single month, and here's the bank statements to prove it. So now you can go to certain banks to be approved if your credit might not be in order just yet. Because now, again, it's not an idea. This is something that's actually making money. Category number 3 is full docs. A lot of times when it comes to full docs, no docs, and light docs, full doc is where you're providing 2 to 3 years of tax returns. So these are actually documented numbers where you're filing your taxes and you're saying, hey, listen, this is how much the business made. This is how much I made. This is how much I paid out in taxes. All the financial documents. This is what you call a full doc, where they're asking for all kinds of documentations as far as tax returns, financial statements, and all kinds of documentation for your business to be able to get approved. So now, when you're going for full doc programs, most times they require you to be in business at least 2 years, right? They want to see 2 to 3 years of bank statements, and they want to see financial docs. They want to see banks, transactions, tax returns, all of that stuff. You must be in business 2 years to qualify for their program to be able to get funding. A lot of times when you're going for that kind of funding, most times you're usually going for a lot of money. Let's just put it like that. You're probably going for like $100,000 loan, $100,000 line of credit, and you're going to that one bank and they'll approve you for the funding, right? So just to recap, you got no doc programs where they're not asking you for any documentation as far as bank statements or tax returns. That's what we want, especially if you're a new business. Category number 2 is going to be light docs, where most times they might just ask you for only the past 3 months of bank statements to be approved, so that way you don't necessarily have to use the credit, or you can use your credit and the bank statements as a combo to be approved for a higher amount. And category number 3 is where you're going out for higher amounts of funding. That might be a business loan over 100,000 plus, or even an SBA loan, or even some kind of construction loan. These are the things that they're looking for when you're going for full doc approval with that bank. So go ahead, comment down below, what did you learn? What's some new things that you're thinking about doing? And go ahead and like, comment, and subscribe to this channel. See you guys next week. All right, so here's a quick announcement before I have our guests introduce themselves. A lot of people that are watching this channel is more than likely small business owners, entrepreneurs, people that are looking to change their lives and make a lot of money for themselves. So now, one thing that I realize is there's stats out there proving that a lot of entrepreneurs and a lot of business owners fail because they have lack of capital. So what I decided to do was I thought it was only right that I start having free classes every single Monday on our YouTube channel on the Motion and Success page every single Monday at 7 p.m. live and direct, where you'd be able to have your questions answered live. And this is literally a breakdown showing you exactly of how you can get funding for your small business. So if you're looking for business credit cards, business loans, business lines of credit, any kinds of funding, this is the live that you want to tune into. So go ahead and subscribe to the channel and put it on your calendar. Every Monday at 7 p.m. we are going live showing you step by step about exactly how to get funding for your small business. See you guys on Monday at 7 p.m. Eastern Standard Time.